Welcome to Investors Insights, where today's topic is hot off the press. So a busy weekend, a lot of the headlines with China and the U.S. trade deal. But before I talk about what we look for in sustainable rallies, and Ty talks about the very important tax bill update, Trey, talk about hot off the press here. A deal has been made. Give us the details on what we know so far and why it matters for the market.
Yeah, thanks, Bobby. So the market this morning is definitely reacting positive to the news over the weekend. The U.S. and China trade talks going on in Switzerland are going very well. There's been a 90-day reprieve on most of those tariffs, which creates a $300 billion positive impact. This chart here from our friends at Strategas tracks the annual dollar amount of tariffs raised based on new policy. You can see the blue line on this chart. It's gone up pretty consistently with a massive spike in early April. And this is and since then there have been a lot of carve outs and pullbacks, but this is by far the most impactful, $300 billion in annual projected tariff revenue coming off the books for the next 90 days. So that's why the market's react so positive. I will say though, since the beginning of all this talk, and really since the beginning of the year, we've tried to emphasize to our clients and into ourselves a 72-hour rule. So you hear news and it gets a big headline, the market reacts. But it's really good to wait about 72 hours to see how the market digests it and see what reality, because the headline is often misleading to what's underneath. And Greg likes to call it the attention economy. We're definitely in the attention economy. So these headlines are positive. I like it a lot better than negative headlines that cause the market to go down that don't necessarily amount to much. Definitely prefer a positive headline, but still headline nonetheless. So I'd like to wait about 72 hours, but still that's what's moving markets right now.
Yeah, so again, hot off the press there. So we'll be analyzing throughout this week the impact of the deal. And then we keep getting questions about whether or not the market rally is sustainable. So I want to go over quickly what we look at to see if rallies are kind of here to stay. So with market futures rallying on the news of a trade agreement with China, what we're really interested in is whether the internals and the leadership can confirm the headline enthusiasm. So I want to share this chart that at the top shows where the market is relative to the 50-day trading average in the blue line and the 200-day moving average seen in the red line. And the market is rallied through the 50-day moving average and is close to breaking through the 200-day moving average. But something we look at, so sustainable rallies break through both averages and stay above them. Another indicator we look at carefully is the percent of stocks at 20-day highs. So you can see below that 20-day highs have expanded to the mid 40% level over the last week, but so far have been shy of the 50 to 60% bar that really implies a durable return of internal rally. So we'll see if the trade news over the weekend can push us through the 50% level of stocks above the 200-day moving average, and also looking at the stocks above the 20-day highs. So both things we look at very carefully to see, okay, is the rally sustainable here? And then Ty, what we think is very important with a trade deal, we think that it's just important that the market looks at the tax bill, extension of the tax cuts. We got a very important update over the weekend. Talk about that.
We did. And so Treasury Secretary Scott Bessent sent a letter to House Speaker Johnson saying, we expect to deplete all of our funds from the Treasury General account by August. Please have a bill done by mid-July at the latest. And so that's an important step to have a deadline in place. We think that deadline's a little conservative. It could have been a little bit longer, but it's nice to have a deadline in place, and it's good that it's on the more conservative side. With that being said, the Ways and Means Committee came out with an initial draft of the tax bill here and some notable provisions in this partial draft. Keep in mind, the only thing certain with this first draft is that it will change, but making income tax rates permanent, standard deduction increasing to by $1,500, child tax credit increasing as well, state tax raising to $15 million and making that permanent, small business deduction making that permanent and going up from 20% to 22%. And then some other things that we're kind of looking for is how is this going to affect businesses and corporations? Are they going to be able to do 100% expense capital goods, expense R&D, higher deductibility on net interest costs? Are we going to get a state and local tax deduction, raise? And then, talking about things like taxing buybacks more, taxing endowments, taxing executive pay and private bonds, things like that. So these are all circumstances that we're looking for. But the good news is we have that X date and there is progress being made, and we want to see that progress continue because we want this thing wrapped up as soon as we can.
Yeah, so positive news on the trade deal with China. Positive news. It looks like we're starting to see some momentum with the tax bill. Again, we think it's just as important as the trade deals being talked about. So again, a lot going on. If you have questions on anything we've discussed today, please call us, email us. We love to hear from you. Have a great week. Thanks.